Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets buried in corporate filings, and I've got a juicy one for you today. Get ready because we're talking about a company that is trying to raise a bit more cash through its stock, and let's just say they've got some very specific numbers to report. Before we dive in, if you love getting these kinds of straight to the point corporate insights, make sure you hit subscribe, and if you want to chat with us and other finance enthusiasts, join our Discord community. The link is in the description below. So, what are we looking at today? It is a Form 8K filing from Edesa Biotech Incorporated. Think of an 8K as a current report, meaning something significant just happened. For Edesa Biotech, it seems they've been busy in the capital markets. This form tells us Edesa Biotech Inc. is the company we're focusing on. They're incorporated in British Columbia, Canada, and their stock trades on the Nasdaq stock market LLC under the ticker symbol EDSA. The key date here is the 12th of December 2025, and that is when whatever happened happened. The main story here is that Edesa Biotech filed a prospectus supplement. Now, what is a prospectus supplement? Imagine you are selling something. A prospectus is like your detailed sales brochure. A supplement is like adding an update or an addendum to that brochure. In this case, it is about increasing the amount of money they can raise by selling their common shares. They are basically saying they want to be able to sell more of their company stock than they originally planned. This is often done when a company wants to take advantage of favorable market conditions or has a specific need for more capital, and they're looking to raise an additional $2,262,508 through this increase. This is a specific amount they're signaling they potentially want to bring in. This is happening under what is called an at-the-market or ATM offering agreement. An ATM offering is a way for public companies to sell their stock over time directly into the public market. Usually through an underwriter, it is like slowly dripping stock into the market rather than dumping a huge amount all at once. This is often used for ongoing capital needs or to take advantage of stock price fluctuations. Now, let's look at the progress. As of right now, the company has already sold about $3.7 million worth of their common shares under a previous prospectus. This shows they've been actively using this ATM program to raise funds. On top of that, they also sold another $837,134 worth of shares under a prospectus supplement from October of 2024. So, in total, they've been quite active raising capital through share sales. When companies do these kinds of offerings, they need legal assurances. So, Fasken Martineau Dumoulin LLP, who are the company's lawyers, have issued a legal opinion. This is basically them saying everything is on the up and up legally for these shares they plan to sell up to that $2,262,508. This legal opinion is attached as Exhibit 5.1 to the filing. It makes sure investors and regulators that the company is following the rules when selling these shares. It is important to note that this filing itself is not an offer to sell stock. They're informing you that they can sell more, but this document isn't the actual sale pitch. It's a disclosure. This section is all about the supporting documents. It lists the exhibits filed with the report. Here again, we see Exhibit 5.1, which is that legal opinion from their lawyers. And Exhibit 23.1 is the consent from those same lawyers, meaning they agreed to be cited in this filing and confirm their legal opinion is accurate. Lastly, Exhibit 104 is the cover page in a special data format that computers can read easily. This is for regulatory purposes. And finally, the filing is signed by Peter Weiler, the Chief Financial Officer. This confirms that the company's finances are being overseen correctly. Okay, so let's break down what this really means. Edesa Biotech is actively using its stock as a way to raise money. They've already sold a significant amount, over $4.5 million in total from what we see here. And they're now looking to increase that potential pool by another $2.2 million. This tells us a few things. Firstly, the company likely has ongoing expenses or strategic initiatives that require this capital, whether it is research and development for new biotech products, expanding operations, or managing debt. They need cash. They feel confident enough in their stock's value and market conditions to continue issuing new shares. However, it is crucial to remember that when a company issues more shares, it can dilute the ownership stake of existing shareholders. If you own shares, your percentage of the company might decrease unless you also buy more shares. It is a balancing act for companies, needing cash versus potentially diluting existing owners. Now, for Edesa Biotech, being in the biotech sector means long development cycles and high R&D costs. Raising capital this way is a common strategy to fund these extensive research efforts without taking on a lot of debt. The fact that they filed this supplement to increase their offering amount signifies that their previous plans for raising capital might have been more conservative, or that they've identified new or accelerated needs. Looking at the numbers, the total amount they've raised previously is substantial for a company of this size. The $3.7 million and $837,134 figures are concrete steps they've taken. The increase to $2,262,508 is a signal of their future intentions. We're not seeing detailed financial statements here, like revenue or profit margins, which would be in a more comprehensive filing like a 10Q or 10. But this 8 clearly points to their strategy of using equity financing, selling their own stock, to fund their operations and growth. The legal opinion from Fasken Martineau Dumoulin LLP is standard but reassuring. It means they've had legal counsel review the process, adding a layer of legitimacy to their capital raising activities. For investors, this filing is a heads up. It means more shares could become available, potentially impacting the stock price. It is not necessarily good or bad on its own, but it is a strategic move by management to secure funds. In terms of risks for any biotech company, the biggest risk is the success or failure of their drug pipeline. If their research doesn't yield results, then the money raised through these offerings might not translate into future profits, and the dilution could feel even more painful for existing shareholders. Conversely, if their research leads to a breakthrough, the capital raised will have been a wise investment to get them there. Overall, Edesa Biotech appears to be in a phase where it is actively seeking to fund its development through the stock market. They are signaling a need for continued capital and are using a flexible mechanism to achieve that. It is a strategy that can work well if the company's underlying research pans out, but as with all biotech investments, there is inherent risk tied to clinical trial success and regulatory approvals. Alright, that is our breakdown of Edesa Biotech's latest filing. What is your take on their capital raising strategy and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.